Hello and welcome to PropNext, the property podcast focused on issues that impact the future of the real estate industry. I'm your host, Gavin Morgan, and in addition to looking forward to today's and future conversations, if you'd like to know a little bit more about me, please look on www.propnext.com. That's www.propnext.com. Or if you'd like to chat privately, drop me a line on gavinrmorgan@propnext.com. That's GAVINRMORGAN @propnext.com on email. I'm delighted to welcome Corey Hamabata to the show. Corey is the Managing Director of Rockpool Capital and TREC Hospitality Investment. I'm particularly pleased to have Corey on the show today. We were colleagues for a long time.
Thanks for having me, Gavin. Really looking forward to the discussion.
Corey, what I'd like to kick off with today is maybe just for the benefit of the listeners, could you just perhaps give us a little snapshot of your career to date? I mentioned an illustrious career in the hotel space, which I know you've had, but maybe you might like to elaborate on that a little bit, please.
Sure, Gavin. Well, as you said, I've come up in the hospitality and real estate space, and probably tell by my voice I'm from the US originally. Coming out of college at Cornell University, I moved to Chicago and worked for a hotel real estate and investment company based in Chicago, doing hotel investment and development across the US. And then after some time there, I moved to JLL in Los Angeles. That was about 10 and a half years ago. Worked in Los Angeles for a little while, then relocated to Singapore, and then from Singapore, ultimately to Hong Kong, where I was for about 4 and a half years. At the end of the year last year, I finished up at JLL and have joined Rockpool Capital. And together we're going to be launching a TREC hospitality investment, which is really focused on capitalizing on what we expect will happen coming out of the COVID pandemic, and specifically investing into hospitality assets with a value-add component.
Hey, Corey, thank you for that. And I'm super interested in getting into investing out of the COVID pandemic. That is such a hot topic at the moment, and particularly in your space, which, as I mentioned to you before, I find interesting. But before we delve into that, Corey, I'd love to ask you about hotels as an investment. And most of the listeners will know that you have 3-star, 4-star, 5-6, etc. From an investment perspective, turning a profit, what's the difference between the different grades? And where, in your view, is the best place to get a return in the sector? Operating hotels, of course.
Yeah, sure. Well, I guess putting operating hotels into context amongst other commercial real estate asset classes, I think the main glaring difference is that hotels are a trading business. They're open 24 hours a day, 7 days a week, and operations are ongoing. So the owner of a hotel is assuming that the operational risk or the operational structure of the hotel, and because of that, their cash flows may move up and down based on market movements. When you look at hotels specifically within the asset class, I think what I love about the hotel sector is that it is really relatable. You've stayed in hotels. Many people have stayed in hotels or interacted in hotels in one way or another. There's many different spectrums in the hotel industry of operations. The traditional rating system of stars is probably something that's really common amongst many people that we know. But one of the innovations in the hospitality industry in recent times has been in the boutique space, where the star system, customers have found the star system to be somewhat rigid, and so you might have a boutique hotel that competes with the luxury properties, but maybe it doesn't have 24-hour room service or some of the big fancy amenities that you might expect in a traditional luxury hotel. But at its base, when you look at hotels, on one end you have the 3-star and budget segment, and that business is typically your highest profit margin business because it's purely guest room sales. There's very little food and beverage, very little ancillary revenue. And then on the other end of the spectrum, you have more substantial operations like your big resorts or your big large group hotels that, in addition to 300, 400, 500 guest rooms, they probably have 3 restaurants and a meeting space business, and maybe you have a spa. And so, those are, much more operationally intensive and typically operate at a lower profit margin. That being said, it's also, there's more levers to turn in those operations when you're looking at places to create value within an operation. So there is a little bit of a give and take between the two.
Yeah. Corey, thanks for that. And I just wanted to go a layer deeper on that. And again, something that I've always been curious about. So let's take a 3-star hotel and say a 6-star hotel. Is there a target? Is there a difference in target occupancy rate where you get to profitability in one compared to the other? Let's say on the rooms.
Yeah. The operating models for businesses are catered to the businesses themselves. And so, for example, if you were to take, say, a 3-star hotel in a city center versus a luxury hotel in a resort market, the operating models might be different. Think about, for example, like the ski markets. The way that luxury hotels will flex their labor in the on and off seasons change quite a bit. So the margins, the break-even margins generally will be different. But I mean, Hong Kong's a great example, right? When you look at the large hotels in Hong Kong today, although they have so many more rooms to sell, they also have a lot of restaurant business that's actually keeping a lot of them, helping a lot of them drive revenue. And when you think about your standard 3-star hotels, they don't really have that kind of differentiator. So although, the break-even profit, on a like-for-like basis might be lower for luxury hotels, they can also attract different types of demand as well.
But okay, so I get that right. So probably in normal times or in times unaffected by COVID, etc. So the room occupancy rate for a 3-star is probably lower to hit profitability. But I hear what you're saying. I mean, with all of the other the dynamic that you get in a 5 or a 6-star hotel, you have so many other ways of turning a profit and driving revenue and attracting an audience. Absolutely makes sense. So, Corey, one thing that I wanted to pivot to a little bit closer to what you're doing now and focused on in the future, and I think you probably gave me the best question that I'm going to ask in your introduction. COVID and pivoting away from COVID and the opportunities in the hotel sector for conversions. I mean, that has definitely slipped onto the radar at a much higher level in the last probably 3 to 6 months than I've seen for a while. So what opportunity do you see there, and how do you think you're going to be able to take advantage of that over the coming year or so?
Yeah. Well, I think the hotel space offers a number of different opportunities, and those opportunities will play out differently in different markets. I mean, the first and most glaring opportunity is the recovery of domestic and international tourism across the Asia Pacific region. When you look at the U.S. market, for example, last year, the U.S. kind of hotel revenue, the industry metric we use is called RevPAR, that recovered to about only 15% below 2019 levels. And so you've got, already demand coming back, and it's recovered in a different way. And so that's one of the immediate areas that we're looking at in the hospitality space is, riding that recovery, but also thinking about what that recovery means. And so when you look at markets that have recovered, there's much more of a leisure drive. There's generally longer stay, to the extent you can appeal to domestic demand. These are all segments that have fared better in the near term on the recovery. And so one angle is to really orient an asset towards that so that it's quicker on the rebound. On the conversion side, the most notable, most common, I think, conversion that we're seeing in Hong Kong is from a hotel into service apartment, co-living, some sort of residential asset, beds or living, if you will. And I think what's interesting about Hong Kong specifically, and why you're seeing it happen more in Hong Kong than in other places, is that, as you know, the living space requirements in Hong Kong or expectations in Hong Kong are just much, much smaller than they are in pretty much anywhere around the world. And so when you think about taking a hotel into a living asset, it's much more feasible to do in Hong Kong than in some of the other markets where the expectations are that people want or need or expecting more space.
Yeah, thank you, Corey. And I'm going to come back to that in a second, but I just wanted to reach back to something you said earlier and ask for a view on it. So, from an industry perspective, do you think business travel is the industry, the hotel industry, is it seeing a full recovery to the types of demand that existed sort of pre-2019 for the business traveler? Or is it looking ahead to a world where there is a bit more of a bifurcation between business and leisure, and a need to sort of structure offerings differently to accommodate that?
I think you've set me up perfectly for this one. One of my favorite industry terms coming out of the pandemic is Bleisure, which is the combination of business and leisure. And this is a huge thing that everyone's trying to catch on to, which is, if people are going to travel for business in the near future, they're going to travel for longer, and they're going to have a propensity to, bring their family along with them, or kind of combine those trips with both business and leisure. I think generally speaking, the hospitality industry, myself included, is expecting a full recovery. And, we've come back from a lot of different disruptions and all this kind of stuff before. And, you can never predict how it's going to recover. But, it always ends up doing that. And I think, if myself and most of the people that I know in and around the region are any proxy, they're itching to travel once they feel safe and once they have the ability to do it without so much restrictions. And so I'm pretty bullish on the recovery of travel as restrictions around the world start to ease, which, when you take it at a global perspective, they certainly are.
And in turn, obviously, a return to the sorts of demand that we've seen previously. Thank you, Corey. But particularly thank you for what could be one of my favorite new words for the next 2 or 3 weeks. You will be hearing Bleisure again, certainly when this podcast is posted, I can promise you. A fantastic term, and I haven't heard that one before. The returns, returning to what you're doing at the moment, the conversion side of things, and the returns. I mean, what sort of returns are achievable? And I'm happy, Corey, for you to single out markets that you're particularly focused on, but sort of picking up a hotel and and moving toward a residential conversion. I mean, certainly a market that you and I are very familiar with, Hong Kong, China. And it certainly seems that there's a tremendous future in multifamily, and this very much, what you're talking about, very much lends toward that and leans into it if it takes off, like many of us are expecting. So at this stage, those types of conversions, do you think you'll get considerably better than market returns, or are you just looking at this as a space where you think good quality returns are available? And if you don't mind commenting on specifically what types of returns.
Yeah. So, I mean, when I look at deal making environment and when I look at the returns that we're looking to achieve, we're looking to play in the space of institutional investors, given that there is a value add component to it and some obscurity around, what a hotel will ultimately do as a kind of a more residential style asset. We're looking to target mid to high teens levered returns, IRRs for these deals. And when you look at the deals in particular for hotel conversions that have been done in Hong Kong, the buyer lists are typically real estate funds, institutional real estate funds, and they often require or underwrite a similar level of returns at mid to high teens level as a threshold on the deals that they're looking to achieve. And so ultimately, working backwards, they're expecting to achieve those types of returns. We're expecting to achieve those types of returns. And when we're looking at projects, they need to have those types of underwritten returns or meet that type of hurdle for us to be interested to go in.
Yeah, thanks. And I mean, Corey, that certainly sounds attractive, relative to what I generally hear, and particularly with the bigger institutional groups and what their targets are. So that sounds terrific. And availability of opportunities. I mean, again, if you look at the Asia Pacific region, particularly, some of the markets are, they're not particularly liquid. And is this something that are you expecting traction to come out of little bits and pieces of distress in or pockets of distress in locations, or do you think there are going to be some of the bigger groups, whether it's in whether hotels groups or institutions, strategically disposing of portfolios that will give you scale and traction at the same time? So basically, what do you see
Yeah.
What do you see the product coming from? I suppose is a shorter way of asking the question.
It's a really interesting time. I think I quickly realized this as I was starting to build my pipeline, getting up to speed in the new firm. We're in an environment, especially in the hotel space, where everything is for sale. And so, if you're reaching out to owners and to brokers and all of these people in the market, you can get a laundry list of assets that are available for sale. The challenge is sorting through that and figuring out what actually makes sense and what you can actually generate the returns that you need to generate on. And so, that's been truly a challenge in today's market. A lot of people saw what was happening as the pandemic was coming in and as it extended on, and they were expecting, myself included, expecting a situation like we had in post GFC in 2009, 2010, where there was a very little liquidity, a lot of deals available on the market, and the could have pretty much bought anything and done very well at that time because prices had adjusted downward so substantially. It's we're now 2 years into this pandemic, and it's in my opinion clear that you're not going to see that same type of adjustment in prices. And so given that, especially in the hotel industry, what you have is an asset that is priced similarly to what it was pre-COVID, but in an operating environment that is more uncertain than it was pre-COVID. And so you need to be effectively compensated for that risk. I think that what's going to happen is that either the price is going to move down slowly to compensate you for that risk, or over time, that risk is slowly going to dissipate as we move out of COVID. The reality is that it's going to likely be both factors moving towards each other. So we expect that there will be continued adjustments in prices. In short, it's not likely that you're going to see a ton of distressed selling, but in the hotel space in particular, you've seen commercial real estate assets trading at levels above pre-pandemic levels in terms of transaction volumes, but the hotel space is still quite a ways behind where it was before the pandemic. And so you have the additional factor of pent-up sales demand that we're expecting to see coming out of the pandemic. And that means more assets available for sale, relatively the same amount of buyers. And so we're hoping that it shifts the power to a buyer's market a little bit more and gives us a bit more leverage in terms of negotiations with sellers.
Yeah, no, it would certainly be great to see more deal flow. And but yeah, I mean, one of the amazing things about working in the Asia region is getting to understand the power that exists amongst real estate owners. I mean, because of the significantly reduced reliance on debt and, of course, the pressures that brings. So it does, yeah. It requires a patient, watchful approach to be able to pick up the right stuff. But it certainly sounds that you've got the strategy for that. So, Corey, in a final pivot, before we close things off, what's your favorite hotel?
There's so many, but
I'll allow you two if you want then.
One of the ones that really sticks in my mind is a resort called Calistoga Ranch in Napa Valley. Unfortunately, today it no longer exists at the moment because it was burnt down. But I was doing some work on the resort earlier on in my career. Really, really an amazing, exclusive resort, beautiful guest rooms, and very exclusive. You can only get in if you're staying at the resort. But what I learned when I was working in more depth with the property was actually it's not a resort. It's a campground. And every one of those hotel units is an RV. And when you look at transferring the title, you're not just actually selling the real estate, but you're actually transferring DMV vehicle registrations. And so what they've done is they've placed kind of RVs together and built wood decking across them. And the design, the execution of the design was so amazing, and it's such a great experience. So that has to be my top.
And that's an absolute corker, Corey, because that is, I am sure, somewhere that not many people that will be tuning in have been to, and I'll be off digging that one out of the internet to have a look at it. Thank you. But Corey, it's been absolutely fantastic seeing you again and having you on the show, and I'd like to thank you very much for making the time to come on PropNext. And when you get back to the region, maybe we can line something else up and have a further conversation with you. Thank you very much.
It's my pleasure, Gavin. Thank you.
So that's a wrap for today's podcast. And it just leaves it for me to thank you very much for tuning in and listening to our conversation. And as I mentioned at the beginning, if you'd like any information or you want to have a chat, drop me a line on Gavin R. Morgan at propnext.com, GAVINRMORGAN at propnext.com. Or there's more information, as I said earlier, too, on www.propnext.com. That's www.propnx.com. I look forward to speaking with you in future podcasts, and thank you again.